Now, let's look at May 2024 examination question paper, question number 2, which is actually a question on internal reconstruction. Question number 1A and 1B is on Accounting Standard 16 and Accounting Standard 2. Here we have it. Following is the summarized balance sheets of Z Limited as on 31st of March 2020. Let's not waste time reading the balance sheet. Quickly come to the end of the balance sheet. Read what are you required to do. You are required to pass necessary journal entries in the books of Z Limited to implement the above schemes, prepare capital reduction account as well as prepare bank account. They haven't asked us to do balance sheet and it's a 14 marker question. Journal entries are simple. Bank account and capital reduction is complementary. Free agi kottubodu. So let's start with the entries. Read the first adjustment, understand the first adjustment, plus the journal entry. As simple as that. Each equity share shall be divided into 10 equity shares of rupees 10 each fully paid up. So basically each equity share will be of 100. We are going to divide into 10 shares of 10 each. Let's see the balance sheet to find how many shares are there. Equity share capital is 60 lakh rupees and shares are of rupees 100 each. 60 lakh divided by 100 is how much? 60. So we had equity share capital of nominal value 100, which is 60,000 shares of rupees 100 each, which comes to 60 lakh. The same 60 lakh is now divided into shares of rupees 10. Please divide it by 10. What do we get? We get 6 lakh shares. So we are going to do 6 lakh shares of rupees 10 each, which will come to equity share capital of 10. So this is being equity shares of 100 divided into shares of 10. Got it? What is after this? Read the next adjustment. The next adjustment what is here is after subdivision, equity share capital will be reduced by 40%. It will be reduced by how much? So 60 lakh will be reduced by 40%. Shall I transfer 40% to capital reduction account? How much is 40% of 60 lakh? 24 lakh. We'll write it as 60 lakh multiplied by 40%. Everyone understood this? Isn't it easy? Come to the next adjustment. Preference shares dividends are in arrears for last 4 years. Preference shareholders agree to waive 75% of their dividend claim and accept payment for the balance. We have a very similar adjustment in the material question that we've done. But there, instead of telling 75%, 25%, we've told 3/4 and 1/4. The rest of it all is same. So 3/4 and 1/4 has been changed to 75% and 25%. Preference share dividends are in arrears for 4 years. Look at preference share capital. How much is preference share capital? 8% preference shares, 21 lakh. Come on, let's do a small working note, shall we? Arrears of preference dividend. Preference share capital is 21 lakh and dividend rate is 8%. Compute the arrears of preference dividend. What is the period? Sorry. Period of arrears is 4. How much is the total arrears of dividend? 21 lakh into 8% into 4 years. 6 lakh 72,000. In that, how much is waived off? 75%. 6 lakh into 75%. 6 lakh 72 into 75%. 5 lakh 4,000 is waived off. And how much is the extent to which it should be paid? In the question that we did in our class, it was settled by issue of equity shares. Here, how are they settling it? Payment by cash? Yeah, payment for the balance. Obviously, payment by cash. 6 lakh 72 into 25% comes to how much? 1,68,000. Did you all get this? Very good. So our accounting entry will be like this. So we know that for the waived off portion, we don't have to write journal entry. Only for the settled portion, we have to write entry. We don't know that. Let me explain why are we going to do that. Firstly, there is no arrears of preference dividend as a liability in the balance sheet. Check balance sheet liability side. Is there arrears of preference dividend liability? So we have to create liability arrears of preference dividend to the extent of 6,72,000. How much? Sorry, we can create it to the extent of 6,72,000. Am I right? When you create it to the extent of 6,72,000, that much is our liability. Sorry, liability as well as our expense. So I'll write 6,72,000 here. So we created a liability to the extent of 6,72,000. Now, settlement. Arrears of preference dividend is 6,72,000. In this, we are going to write off 75%, which is 5,04,000, and we are going to pay a portion of it. How much are we going to pay? 1,60,000. So what is happening here? Here we have arrears of preference dividend debit 6,72,000. Am I right? Let's strike it off. Fifth, arrears of preference dividend credit 6 lakh 72. Capital reduction. We have here credit 5 lakh 4 and debit 6 lakh 72. 6 lakh 72 minus 5 lakh 4 is how much? 1 lakh 68. Can I say the journal entry is capital reduction account debit to cash account 168, 168? Basically, to the extent liability is unrecorded and waived off, there will be no accounting entry. We will pass journal entry only to the extent there is liability and it is written off. Am I right? However, there is no liability but there is payment, then we'll write entry. Here there is no liability but there is payment. So the extent to which we pay, cash will go out credit, and to the extent to which we pay, it is our expense because it's not a liability in the balance sheet. So the entry is capital reduction account debit to cash 168, 160. Will I write in the above set of journal entries? I hope everyone is clear with this. Come on, let me write here capital reduction account debit to bank account or cash account 1 lakh 68 being arrears of dividend paid. Here, after this, the next adjustment is own debentures. So we have purchased our own debentures because maybe our debentures are traded below nominal value in the market. Our debentures are traded below nominal value in the market. So we have purchased own debentures. Let's see. How many own debentures are there? Nominal value 2 lakh 40. Nominal value were sold at 98 and come interest and remaining own debentures were cancelled. Come to the question here. Balance sheet. How many own debentures do we own? 6 lakhs is the nominal value and the book value is 5 lakh 76. We have purchased it at 5 lakh 76. This is representing this 10% debentures here 18 lakh. So we can cancel, no? I have issued debentures to public. I have taken it back from them by paying money. So I have my own debenture. I can tear it so that I don't have to pay interest to myself, deduct TDS on myself and file TDS return on myself, which I'll get credit. If I pay interest to myself, it will become expense and income. No, usually don't do that. What do? We tear that debenture, but they're not tearing completely. Some part of the debentures are sold, some part of the debentures are cancelled. I will do the same, but first we'll do one detailed working note on this. Yeah, because it's slightly tricky. Own debentures. Nominal value of own debentures that I have is 6 lakh and book value is 5 lakh 70. And we have sold. What nominal value of own debentures are sold? It's given in the question. 2 lakh. Very good. 2 lakh 40,000 is a nominal value of debentures sold. Now we need to find the book value of these debentures which are sold. How do we find book value? See, if nominal value is 6 lakh, book value is 5 lakh 76. If nominal value is 2 lakh 40, how much is this? We will do 5 lakh 76,000 into 2 lakh 40 divided by 6 lakh. 2 lakh 30,400. This is sold at the cumulative interest price. Whenever it is sold at cumulative interest price, we need to eliminate the interest, identify the X interest price. That we will compare it with book value to identify the profit or loss. Am I right? Have you done this in investment accounting AS 13? Yeah. So I'll write cumulative interest price. How much is cumulative interest price given in the question? 98 cumulative of interest. So for one debenture, it is 98. Let us assume nominal value as 100. Nominal value is 2 lakh 40. What is the nominal value of debentures sold? 2 lakh 40,000 is considering 100. 90, what will be selling price? 2 lakh 40,000 divided by 100 into 98. How much will you get? 2 lakh 35,200. We need to deduct interest. From what date to what date do we deduct interest? Last date of interest to the date of transaction. Am I right? This entire scheme of internal reconstruction is happening on 1st of April. And last date of interest come to the end of the problem. Interest on 10% debentures is paid on 31st March. So last time interest was paid 31st March. We are doing internal reconstruction 1st of April. No interest. So cumulative interest price was hange to trick you people. Interest is 0. X interest price will also be 2,35,200. Henge joko. You got tricked, no? My God, interest price. How do you find interest? Interest is there, 0. Why? Time is 0. You understand? Time is sarila, sir. And now ignore this 2 lakh 40. Okay. Book value 23400 is sold for 235,200. Is there profit or loss? Profit, guys, profit. When we sell, no money will come. Bank account debit. How much will come, Lakshmi? 2 lakh 35,200. How much will you give up? Debentures, own debentures. 2,30,400. Difference is there, no? Profit 4,800. Any profit or loss arising in the process of internal reconstruction should be transferred to. Okay, this much is sold, no? They have told that the balance of debentures are cancelled. Balance of debentures are, should know what is the balance of debentures book value. Shall we find it? Okay, what is the nominal value of own debentures? 6 lakh. In that 6 lakh, if 2,40,000 nominal value is sold, what is the remaining nominal value? 6 lakh minus 2,40,000. 3,60,000. 3 lakh. It is our responsibility now to find the book value of this 3,60,000. How do you find? Very simple. For 6 lakh 70,000, sorry, for 6 lakh nominal value, book value is 5,76,000. Correct? For 3,60,000 nominal value, how much is book value? 5,76,000 into 3,60,000 divided by 6 lakh. 3 lakh 3,45,600 is book value. Am I right? It is adjusted against my liability. Cancellation means I have own debentures asset. I have my debentures liability. Asset and liability will get cancelled. What is the asset decreasing? 3,45,600. What is liability decreasing? 3,60,000. What is liability decreasing? 10% debentures. Same own debentures are there on the liability side as 10% debentures. No. I will tear that paper and cancel the debentures. So I will write my 10% debentures liability decreasing 3,60,000. My own debentures asset decrease 3,45,600. If I would have not purchased these debentures from the market and cancelled, if I would have been there with people on the date of redemption, I was supposed to pay them nominal value of 3,60,000 because I bought it back from them and now I'm adjusting. I'll pay them only 3,45,600. When I purchased it from the market, I paid only 5,76,000. No, nominal value is so much. If I would have not done this purchase, if these debentures were traded in the market, on the date of maturity, I need to redeem them by paying 6 lakh. But I bought them for 5,76,000 only. That is the reason there is profit. Do you understand? Sir, why not enter 24,000 is profit? He cancelled how much? Nominal value of 3,60,000. Only proportionate to that, whatever is there will be profit. You get it? How much is the difference here? 360 minus 345, 600. Any profit or loss arising in the process of internal reconstruction will be routed through capital reduction account. This is slightly tricky, but we have the same adjustment, sorry, similar adjustment with different numbers in our material. The next question from where we stopped yesterday. You see, there is debenture adjustment in that question. You want to see? Rodtira. Which question did we stop at yesterday? Question number 7. 8. Okay. 8 has that arrears of preference dividend adjustment. No, no, not 8. 7 has that preference dividend adjustment. Have a look at it. 7th one. See, preference dividend. No, no, no. 7th one, 6th one. 8th one has preference dividend adjustment. Same alva. See, one of the preference dividends were in arrears for 4 years, 3/4, same thing. Here they've told 3/4, 1/4, we did 75/25. Here they've told settle by shares of 2 each, we settled it by cash. Debenture, here there is some revaluation of asset adjustment here. Freehold property partly taken over by debenture holders, partly adjustment is there. In the question that we're doing now, examination question also, some part of property, plant and equipment is taken over by debenture holders. Remaining part, there is revaluation. Next adjustment, I'll show. And then we have debenture adjustment in the next one also. The total debt, some part is there. Here it's there, and there is one more debenture adjustment somewhere. Director, liability. Which question? I think that question only we just read. No, there it's there. Part of the debentures are settled by way of 7th. There only it was there. No, debentures were taken over. Part of the consideration was adjusted by taking over of some asset, and the balance is revalued. Same adjustment is there here also. But this part is slightly new, but still doable. Isn't it new, doable? This is the only new part in the question that came in the examination. There should be something new in the exam, no? So this part is new. The next dividend adjustment, next debenture adjustment is what we have in the class notes. Isn't this easy? Did you understand this? Pakka. So we should write two entries. One for sale of debentures. Treat it like sale of any other asset. Treat it like sale of any other asset or treat it like sale of any other investment. Normal sale entry. Bank account debit, to investment, to profit. To profit will be changed to capital reduction. And here we are settling our liability against our asset. Difference is again profit. Shall I write these two entries in our set of entries there? Observe here. Here, this entry will appear same to same. Bank account debit to own debentures to capital reduction. This is sale of own debentures. And cancellation is there, no? There. 10% debentures account debit to own debentures. 3 lakh 60 is the nominal value of debentures decreasing. 345 600 is own debentures decreasing. Difference is capital reduction of 14,400. Done. Come to next adjustment. What is the next adjustment in the question here? Debenture holders of 6 lakh agree to accept one machinery of book value 9 lakh in full settlement. One machinery whose value is 9 lakh is going away. And liability is reducing by how much? 6 lakh. So to settle 6 lakh of liability, we're giving machinery of 9 lakh. There's going to be 3 lakh loss, which will be debited to capital reduction. Shall we write it? Okay. Let us write 10% debenture account debit. How much is liability decreasing? 6 lakh. How much is our asset decreasing? They have told machinery, but we should actually write property, plant and equipment. Okay, I'll change the narration. Actually, machinery. But the name that we'll use is property, plant and equipment. You know why? In the balance sheet, there is nothing called machinery. If you observe balance sheet, there is nothing called machinery. There is only property, plant and equipment. So machinery is included in property, plant and equipment. So I'll write 9 lakh. Difference of 3 lakh will be capital reduction. Okay. Being owned debentures cancelled against ventures. Okay. Here, narration. What's happening? Being 10% debentures settled by transfer of machinery. So we had how much of machinery with us? Property, plant and equipment. 72 lakh. In 72 lakh, how much of property, plant and equipment has gone? 72 minus 9. 63 lakhs worth of property, plant and equipment is still there with us. Got that? Remember that and then let's read the next adjustment. What is after that? Remaining property, plant and equipment is revalued at 60. 63 lakh is there. We revalued it to 60. We're reducing the value by 3 lakh. So I would have to credit my property, plant and equipment by 3 lakh and I'll debit capital reduction by 3 lakh. If you did not understand this, I don't mind. I can teach you with the help of a detailed working note. But is it required? Actually, no. 72 lakh is the value of total property, plant and equipment. How much is the value of which it's taken over by debenture holders? 9 lakh. So remaining is 63 lakh is book value. Revalued figure is 60. So there is downward revaluation by 3 lakh. Easy. And entry is also passed. Asset credit, debit will be capital reduction. Capital reduction account debit to property, plant and equipment. What is after this? Then trade payables and trade receivables and inventories were valued at 15 lakh, 13 lakh and 9 lakh 44. If the asset value is increasing debit, asset value is decreasing credit. Liability value increasing credit, liability value decreasing debit. Let us see. Trade payables will become 15. How much is trade payables in balance sheet? 16 lakh 80. 16 lakh 80 has become 15 lakh. Trade payables has decreased or increased? Trade payable is a liability. When a liability decreases, what should I do? So I will debit trade payable. How much? 16 lakh 80 to 15 lakh. So 1 lakh 80. Got it? Am I doing it really fast? After that, trade receivables has become 13 lakh. How much is trade receivables in the balance sheet? Trade receivables is 13 lakh 75. 13 lakh 75,000 has become 13 lakh. So trade receivables asset is decreasing. Credit, how much? Very good. Let me write here. Trade receivables, 13 lakh 75,000 minus 13 lakh. That is 75,000. Trade receivables is decreasing by 75,000. Got it? What do we have after that? Inventories. Inventories should be revalued to 9 lakh 44. What is the value of inventories in the balance sheet? 9 lakh 80 is becoming 9 lakh 44. 980 is becoming 944. That means inventory value is decreasing. 980 minus 944, 36,000. So inventory value is also decreasing. You all get this? Very good. Is there any other adjustment in the same thing? Goodwill and P&L account have to be written off. Goodwill and P&L account debit balance both are asset here in the balance sheet. Debit balance. We'll credit it. Goodwill 81,000. P&L debit balance 12 lakh 34. Play Bharat credit to goodwill 81 to P&L account debit balance 12 lakh 35. Balancing figure put it to capital. Take this 1235 plus 81 plus 36 plus 75 minus 1 lakh 80. 12 lakh 47,000 worth of capital reduction funds are utilized. If you want, you can write single entry. Trade payable to capital reduction to trade receivables, capital reduction to inventory, capital reduction to goodwill, capital reduction to P&L. Marks will be same. Just because you write 6 entries, 6 marks ಕೊಡ್ತಾರೆ, 1 entry, 1 mark. ಇಲ್ಲ. Get this? There's something. Write one narration. Being, let's say, trade receivables, payables, inventory, adjusted, and goodwill, P&L, written off. Writing narration is important. Narration being right is not important. It doesn't have to be grammatically correct or something, but writing narration is important. Huh? Don't skip writing narration. Write it your own language in a simple way. That should do. Done with this adjustment, then come to the next line. What else have they asked us to do in the question? Company paid 60,000 penalty to avoid capital commitment of 12 lakh. How many times have we done this subject? Oh, how many times? And every time they used to tell us the capital commitment amount and percentage of penalty. Here they only told 60,000. So we'll write, it's not a liability in the balance sheet, but we're still paying. So capital reduction account debit to bank, 60,000, 60,000. Paying penalty for breach of capital commitment paid. Got it? What is after that? That doesn't count. Why? We're doing internal reconstruction on 1st of April. We're assuming that interest is duly paid last year on last date. That was only to help us identify that debenture adjustment. Right now, nothing. We're not doing transactions for entire year. We're doing transactions only as on one date, 1st of April. So this has no impact. They've asked us to do journal entries. We are done. They've also asked us to do capital reduction account and bank account. So capital reduction account is what I should prepare now. Before that, balance in capital reduction account should go to capital reserve. That will identify in ledger only. However, we are doing ledger, no, it will become easy. Come to the first entry. See, there capital reduction here. Second one, it is equity share capital account debit to capital reduction. So in capital reduction account, what do I write? Why equity share capital 24 lakh? Shall I write? In capital reduction account, I'll write by equity share capital account 10 lakh, 24 lakh. And with that entry, let's go to the next one. Sorry, 24 lakh, this one done. Next entry, what is it? Capital reduction account debit to bank, 1 lakh 68. Shall I write? In capital reduction account, I'll write to bank, 1 lakh 68. They've asked us to do bank account also. In capital reduction account, if I write to bank, in bank account, I'll write by capital reduction 1 lakh 68. That's good. Then let's go to next transaction. What is after that? 168 I2. Bank account debit to own debentures to capital reduction. Okay. In bank account, debit will be 2 lakh 35 200. In capital reduction account, credit will be 4,800. Bank account debit how much? 2 lakh 35,200. First line I'll leave it for opening balance. Second I'll write 234 and 4,800 capital reduction. Together 235. It is 235 200. No. Bank account debit, 2 own debentures, 2 capital reduction. So I have written in bank account 2 own debentures, 2 capital reduction, 235, 200. In our capital reduction account, I'll write by own debentures, 2 lakh, sorry, by own debentures, so much? No. What is that entry? Bank account debit, 2 own debentures, 2 capital reduction. No, 4,800 only I should write. So I written 4,800. It will be written through own debentures account. We won't write by bank. By bank and the paribaradu. We should write it through own debentures. To split that entry, it will become bank to own debentures to capital reduction. What you did not understand is this journal entry, we split it into two. This journal entry, bank account debit, 2 own debentures, 2 capital reduction is there. If you break this entry into two parts, it is not bank to own debentures, bank to capital reduction. It is bank account debit to own debenture account debit to capital reduction. If you split this entry into two, you won't write bank account debit to capital reduction. You should write bank account debit to own debentures. 235, 200, 235, 200. Then own debentures account debit to capital reduction 4,800, 4,800. If you write bank account there, it is not wrong. It is not wrong, but it's not completely correct also. If you want me to write by bank, we did this in investment accounting, splitting entry into two. Then next one, 10% debentures, 2 own debentures, 2 capital reduction. In capital reduction account, I'll write by 10% debentures, 14,400. This one. I'll write in capital reduction ledger, capital reduction account. By own debentures, 14,400. Okay. Then what is the next entry after that 14,400? 14,400 over. Then here 10% debentures, debit, capital reduction, debit to property, plant and equipment. So can I write in capital reduction account to property, plant and equipment 9 lakh? Sorry, 3 lakh. Let me write to property, plant and equipment. How much? It is not machinery. It is property, plant and equipment. 3 lakh. Okay, now. Then what do we have after that 3 lakh? To property, plant and equipment 3 lakh. Where is it? Where is it? We are just done with this. Then capital reduction account debit to property, plant and equipment. This is profit on transfer. This is revaluation. So again, I'll write to property, plant and equipment 3 lakh. To property, plant and equipment 3 lakh. This is profit on transfer. This is revaluation. I have not written it two times by mistake. Sir has done double entry. ನೀವು ಅನ್ಕೊಂಡಿರ್ತಾರೆ double entry. Correct ಆಗಿರೋ double. Here, which ledger do I write? So many items are there. Right? By sundry assets and liabilities, 12 lakh 47. Which assets name will you write? Which liability name will you write? For 12 lakh 47. So I'll write by sundry items, 12 lakh 47. Okay, now. Yes, let me write here by sundry assets and liabilities, 12 lakh 47. Then after that, capital reduction to bank. Capital reduction account, I'll write to bank, 60,000. In bank account, I'll write by capital reduction, 60,000. Done. Everything is over. In capital reduction account, identify balancing figure. It will be transferred to capital reserve. I think we have P&L account debit balance in the balance sheet. Did we write off? Goodwill also written off? So then it will be going to capital reserve only. How much is total? 168 plus 3 lakh plus 3 lakh plus 60,000. 36 lakh 66,200 minus 24 lakh minus 4,800. Have the puta. Sundry. Okay. 1 second. Here we have written. Oh, debit side, alva. Okay. Two sundry assets, Allah. Thank you. How much is the amount? So can I say the total on the credit side is 24 lakh 19,200? Debit side is 36 lakh 66,200. Is this right? Am I right? So that means actually we cannot write off so much. We cannot. Hey, can the difference. Okay. How much is capital reserve? Bharat, okay. Capital reserve will come. Can I say the capital reserve is 24 lakh 19,200 minus 3,44,200. So last journal entry here is capital reduction account debit to capital reserve 3,44,200. Being capital reduction account closed by transfer to capital reserve. One last thing we should do before we complete the problem is bank account. To close bank account, I have to identify bank balance carried down. To do that, I should write opening balance of bank. How much is the opening balance of bank in the balance sheet? 1,33,000. 1,33,000 plus 2,30,400 plus 4,800. 3,60,200 minus 2,28,000. 1,40,200 is the balance carried on in bank. They have not asked you to do balance sheet. And this is the end of the answer. 15 marks. I agree it's slightly lengthy, but it is definitely doable. It is not tricky except for the debenture adjustment. That also, if you catch that interest is zero, CIP is EIP, normal sale entry. The second part is cancellation.